Hi, this is Joseph. Today is December 6th. This is the end of the week trade copier update. The total number of pips that I earned with the trade copier service this week was 832 pips. Before I continue, I want to explain. Sometimes people will say, well, that's a lot of pips. It is, but I'm not double counting. Sometimes they'll ask, are you double counting? How many lots are you putting on the trade? Are you putting on like 10 or 5? And that's how you're getting 832 pips from the entry to the final target. Now, what I will say is that with all of these trades that I execute into my own MT4 account, the trade copier will automatically copy it and put it into my subscribers account. So if you are one of my subscribers, or if you want to be, you could use the trade copier, connect it to your MT4 account, and when I take one of these trades, it'll go straight into your account right away. And then it duplicates everything that I do. So if I change the stop loss or if I change the target or anything like that, the trade copier will instantly make any adjustments into your MT4 account, your platform. It'll make all those adjustments. And if I close out a trade at a specific level, let's say before a take profit target, if I set one in or something like that, it'll close out the trade instantly. So you're always going to be protected. You're always going to be able to get, for the most part, exactly what I get as far as the number of points on a trade. Now, as far as the amount of money that you'll earn on the trade, that's up to you. You can specify the lot size. So inside of the trade copier, if you want the trade copier to execute one standard lot because your account balance can handle a trade of that large, that size, then that's okay. That's exactly what the trade copier will execute is exactly what you specify. So regardless of what I trade, the size that I trade, it doesn't matter. Whatever you specify in the trade copier, it will do exactly what you specify. That way you're not going to be overexposing your account, anything like that. Now, I sometimes have more than one trade open at the same time. At one particular time, I might have two trades open. So you'll see that in some of the videos. On some of them, like let's say, for example, if I'm trading the euro yen and the pound yen on a particular day, I might get the same signal right around the same time. It just depends on what's going on. Every day is a little bit different. And then there are other times when I just take one trade at a time. I don't trade all of the current major currency pairs. I just kind of do it in cycles. Sometimes I'll be trading the euro dollar and the pound dollar a little bit more. Other times I'll be trading the dollar yen and the yen crosses a little bit more. It just depends on that week, whatever's affecting it. I'm sure you've seen the markets. You've probably watched the markets long enough, Forex, to know that things move in little cycles. It just depends on what's going on. And then other times I won't trade the dollar Canadian for a while, and then one day I get a lot of trades on it. Like I might have two or three trades on the dollar Canadian. So it really depends. Again, if you're using the trade copier, you just put the trade copier on your MT4 account, open up all the charts that I trade, the currency pair charts for those that I trade, all of them, the 8 majors, and then you're going to get the trades if you want them. Again, you can specify the trade copier to only execute one trade at a time so that perhaps you don't want two trades open at the same time. So you can set it up so that it'll only take one trade and it will not execute another trade until the first one's closed. Now, in that case, if you're a subscriber, you might get different trade results. So if I say that I made 832 pips for the week, that's what I made in my account. That's what most of my subscribers will make. But any subscriber that is specified or set up the trade copier to only execute one trade at a time, and I happen to have two, and that ends up giving the grand total of 832 pips for the week, yours might vary. Just be aware that there's some differences depending on each subscriber's goals and their interests. So if you just want to let it take every trade, that's okay too. Just be mindful of the lot size. You want to make sure that you cut it down. Maybe, your typical lot size, maybe you want to cut it in fourths if you want. If you want to have all the trades, I don't have four trades open at one time. Usually, if I do have more than one trade, it's going to be two trades open at one time. Now, the other thing that I want to talk about is I get a lot of questions at the end of the week. Some people that are interested in the trade copier, they'll say, that was a great video. I saw one of your videos this week, but I want to know more. What is it that you're doing? What's your trade style? So that's what I'm going to talk about in this video, not just the 832 pips. Now, again, I don't average 832 pips every single week. It varies. Sometimes it'll be 300 pips. Sometimes it'll be 100 pips for the entire week. It just depends on the week. We've got Christmas coming soon, and then the end of the year. Those things sometimes have an impact on the amount of trades that I have, and I do take the holidays off, so I will be, not trading for a couple of days in there. Um, But for the most part, I mean, there are really good weeks where I can make 800 or more pips or 1,000 pips in a single week. It doesn't happen all the time. So please be aware of that it just depends on the market. I just do what, I just follow the market and wait for my setup. So I want to talk about, and I got questions here with this trade on the euro dollar. So this was on December 5th, and I made a video. This is the 15-minute chart. The reason I'm showing you the 15-minute chart, I do look at the 15-minute, I look at the 1 hour chart, but I'm trading off of the 5-minute chart. I try to pinpoint a trigger bar on the 5-minute chart. So I got a couple of questions on that trade on the euro dollar that day. How is it that I was able to take two trades? Some people, I think, were looking at an opportunity to try to fade the breakout or fade it. And I was looking for a continuation. So that's what led me to trade this little breakout right here for a second trade to the upside. When other people were trying to sell it here and they were expecting it that this was the high, maybe that was the test and that was the end of it. They saw a couple of pullbacks and they were trying to short it. The first thing I want to say is I'm saying that I'm aware that some people were trying to short it because that's the questions that I received on some of the emails asking me why did I go long because they were considering going short. So I don't know if they were in a group, a Discord or a chat room where somebody was organizing that particular group and they were trying to sell it and I was not, and they just found it curious that I was still looking to go long. The first thing I want to say is that I used to do the same thing. I was always looking for tops and always looking for bottoms, and I was trying to fade those moves. I would tell myself, and this is back when I first started trading, I would tell myself and I would look at a move like this and I would think, well, it's really, really overextended. I would look over here and I'd say it's been, moving up since the overnight session after the rollover, and then the previous day it moved up. I'd be telling myself all kinds of things. So I had a personal bias. And that was the most damaging aspect of my trading capabilities up to a certain point when I stopped and I had to work on training myself to no longer think that way. I I don't try to come into the market with a bias. I know that that might sound like the exact opposite of what a lot of other people are doing on their videos. That they'll do an end of the day video and then they'll look at the end of the day, the daily chart, and they'll look at the 1 hour chart and they'll try to figure out what's going to happen tomorrow, where we're going to go as soon as the market opens. And I'm usually trading during the New York session. So I know anything can happen during the Asian and the London session. So I look at the end of the day, I look at the daily time frames and I do have, I'm aware of if we're in a bullish market still on the daily time frame or a bearish market still on the daily time frame, whatever that might be, or if we're just going in sideways in compression and we're just moving into consolidation, like a trading range. And I don't allow myself to have any kind of bias other than what I see on the chart, whether it's a daily chart. So, for example, daily chart, let's take for example, like the S&P or any of these others. It doesn't matter if it's the FX market, whatever the case might be, the daily time frame. If they're moving up and they're above, let's say, a certain moving average that I might use, you might use yours. Either way, whatever it is that you use to determine the bias for the day, that is a very important aspect of your trading. Look at that and don't fight it. Just don't fight it. That's what I kept having to tell myself and teach myself, train myself to stop having these opinions that it just can't go up any higher. It's due for a sell, like it's due for a top or something. It's time to start fading it. The other thing that I used to do is I would look at this as one move, maybe a second move, and then a third move. And then I would say here, well, it's exhausted and it's time to sell. And it's not. It's just you'll get stopped out by doing that. You need to let the market reveal to you. And you've probably heard this before, but without having a specific strategy where you could then determine if the market has revealed it to you, that it's done and it's now reversing and starting to go in the opposite direction. So that's what I was doing on December 5th with the euro dollar here. I wasn't fighting the trend. I saw this big move. There's obvious, yeah, I mean, it could go up for a double top, which it did. That's what I was trading. And I know that that's a common pattern. So these are old school patterns that I'm trading. I'm not trading anything new, anything unique. This breakout right here, it turned out to be some kind of a wedge, like some people call it a triangle. It's more of a wedge, but there's a breakout here and it's in an uptrend. And there really isn't anything here that tells me that it's coming back down. You don't want to just look at one bar by itself. There has to be a break of a trend line or something to that effect, depending on the the chart and the time frame that you're looking at. And then again, the other issue, the other pattern that I'm looking for is a double top. I love double tops. I love double bottoms and wedge breakouts and wedge bottom breakouts, wedge top breakouts, and head and shoulders patterns. They're very, very, very reliable patterns. And with ICT and a lot of the talk that's been going on in the last 4 or 5 years, its popularity, and now it's kind of everybody's kind of washed through that and figured that one out. There was a lot of people that interpreted this information, whatever they were learning, and then they started saying, well, no, I don't want to do that anymore. It doesn't make any sense to look at indicators. Doesn't make any sense to look at these, support and resistance zones. I hear people struggle. So they're, for example, ICT traders, they'll say, I don't use support and resistance. But then sometimes in the very same video, they'll say this is kind of a support or resistance. And I almost want to think this is what I was doing. I was just trying so hard to say that it needed to fit one way when it doesn't. It's just the old school way seems to outdo and outlast and outperform everything. I mean, there's a reason why Paul Tudor Jones says that he read, these old books that were written in the 30s and the 40s a few times, and he uses them and he uses them, and that's what helps. And a lot of these professional traders that have been around 40, 50 years say the same thing. So these are basic patterns, and they're actually the psychological behavior collectively of everybody that's in the market at that time. So it's okay. It's okay. And that's what I want to say about these in this video is that my trading style is an accumulation of 24 years of learning all of these different methodologies, and I will admit that I wasted a lot of time following people and learning from people that didn't really know what they were talking about. I mean, they had limited experience, but you move and you evolve and you go looking for another expert and another expert and another expert, and you keep finding. Eventually you find and you source out the people that are really truly at the top of their game. They really, really did figure it out. They really did study it, and they know what to do. They know what to tell you what you should be studying to implement all this. So I don't want to turn this into a lecture or anything. I'm sorry. I just want to explain my trading style is technical. I'm reading price action. I don't rely on the indicators to give me the signal itself. I look at price action in the bars and the charts on the charts to give me my triggers and my entries. And I'm looking for measured moves. I'm looking for specific targets on every trade. I'm also aware that there are computers and other professionals that are much, much smarter than me, and they've been around a lot longer than me. And they are able to do this. They are able to program computer programs to trade some of the activity that we see throughout the day. So I'm aware that there's a lot of mathematical calculations that take place throughout the day to give us a lot of our measured moves, to give us a lot of the patterns. You'll find that things are very, very efficient in certain markets because of what I just explained, professionals and computer programs that are trading in certain markets. So that's another thing that it took me a while to accept and to learn, that that's why things look the way they do. And that's why I can eventually learn to trust the patterns and the setups. So I developed, and everybody does it on their own, right? I developed a little system within everything that I just explained, within these geometrical patterns that are old school and they work. And they're the collective psychological behavior and the mathematical outcome of movements that not only are professional traders using to measure, to target, to take profits, or to trade to, or to look for reversals, whatever the case might be, so are computer programs. There's billions and billions of dollars running in and out of the markets, all markets. And this is what it takes, that to have this overall understanding of who's in the market and what causes all of this to work out the way it does. The reason I say that is that in order to be able to execute and to take trades, you have to have faith in the system that you've created, and faith in what your understanding of the market and the movement and the price action is. You have to develop that. And at that point, and once you get to that, then it takes a long time to believe it. It takes a long time to believe that these patterns work, and to see them over and over again, and to test them and to prove them to yourself. So that's what I was doing. I wasn't going to fight the trend. I used to fight the trend a long time ago, and it didn't work out for me. So I learned to trade it correctly. I learned how to trade it accurately, until the market tells me that it's no longer going to go any higher. That's another system that you've got to learn. That's another methodology you have to understand. But you have to study it. You have to study it. And then once you study it and you understand it, you have to execute it and implement it and study that over and over again until you get to the point where you believe it. It takes a long time. It really can. So that's what I was doing here with this trade. Again, a lot of people several people that had emailed me were trying to short it. They found it interesting that I took this trade going long. Again, this is a 15-minute chart. I found the trigger and the breakout on the 5-minute chart, as you can see in the video from December 5th. But I just wanted to show you an overall picture of the pattern and what's going on here. And you can see it here still on the 15-minute chart. So it is very technical. I don't trade the news. I don't trade the news. So if you've ever considered using my trade copier and you're wondering if I trade the news, because you can lose a lot of money if you're on the wrong side of a trade like that. I don't trade the news. I wait. I wait until there's the reaction and then the outcome. Um, and then usually or generally, I just wait for the trade to set up. Another question that I received a couple of times was some questions about the dollar yen. So this is the 1 hour time frame on the dollar yen. I'll go to the 15-minute chart. We'll detach it here, and then there were a few things that I was doing this week, December 5th, by the way. So this spike to the upside, you can see it much more. It was much more dramatic move on the 5-minute chart, but it was just one 5-minute bar, and it just kind of shot straight up. It doesn't matter what it was, whether it was news or whether it was some kind of rumor, whatever it was that caused that. You can see exactly here, even on a 15-minute chart, just how clear this reaction was likely to set. If there was going to be something that was going to happen like that, it was going to happen like this. And then it went straight up, and it was we were already in a downtrend, and I referred to it as a head fake. So it was one 5-minute bar that went right straight up like that, and I knew what was happening, and I faded it. I shorted it. Not necessarily a technical pattern in the fact that it shot straight up on a 5-minute chart, but I could see that this was a random surprise bar that anybody that was looking at the markets at that time in this particular chart would have probably been suspicious about what just happened. So I've watched this, I've watched these markets for about 24 years, and I see this happen all the time. I mean, I specifically remember a time, I think it was 2015 with the euro dollar. There were some people in Greece that made a comment. It was just a rumor, and it was an opportunity for people to make money in 15 minutes. And it was a total lie. But there are events like that can have an impact on the markets. The people who implement these rumors and these lies to be able to create an opportunity for themselves to make money, they're ready. They're ready, and it usually lasts a very, very short, quick period of time. In most cases, it's just a 5-minute bar, or it may last 10 minutes, that opportunity. Again, it was an issue with it was a rumor out of Greece that would have had an impact on the euro. And the opportunity in the move was just 10 minutes. And then quickly after that, the market recovered, and the news agencies, any blog or forum that you went to, they were all over it, and they were explaining that it was just a total lie. So obviously people were creating that opportunity. It hit the internet, and it moved to the upside, I believe, and then it was just an opportunity to fade it. Now, I'm not saying that's exactly what happened here, but technically it's still the same pattern, the same behavior. Something's wrong with that 5-minute bar. Do I really believe that 5-minute bar is the start of a move and a reversal, especially what I could see on the overall larger time frame and the big picture? So I'm not just randomly chasing price action. That was the real question that I got when they were asking me about this head fake move here on December 5th and why I shorted it, why I faded it. I sold it. So after the move up. So again, so they were asking, is that part of your trading system, or do you just chase price when you see it breaking out? And no, I mean, if it was going to be a breakout and it was going to continue, then I would look for more technical aspects that would lead me to believe that it was going to continue higher. So hopefully that'll give you an idea. If you watch some of my videos, 800, pips, over 800 pips in a week, it's a lot. Um, I'll be able to do it again when the opportunity presents itself. I don't know if it'll be next week, but I just want you to know that sometimes when you hear people talk about making any amount of money, whether it's 100 pips a day, 100 pips a week, or 800 pips a week, or 1,000 pips a week, you wonder, like, what is it that this trader is doing? Do they have a real system that's legit and they've been using it for a long, long time, and they got the data and they study it and they work to refine it, improve, and make sure that they do just that? Or are they just randomly chasing price action up and down? I mean, I've been around for long enough to know that there are people that come and go all over Facebook, all over YouTube and Twitter, and then they kind of disappear and their luck runs out after a while. And I think it's because they might spend so much time, I don't know, so much time enjoying social media and the attention, maybe I've actually seen it, and they don't spend as much time as they should studying the markets. I really don't like spending any time on social media. I don't like making videos, but I know it's important for people who want to consider an opportunity like this, and I know how helpful it is because a lot of my coaching clients are using my trade copier as a supplemental opportunity to gain confidence in executing the trades that I'm working with them to either learn or helping them build their own trading system. So when they use my trade copiers, they're actually seeing what I'm teaching them in real time. It helps to reinforce that opportunity to believe in the trading that you're seeing. Is it luck? Is it, how long is it going to take if it's luck that before until the luck runs out? Or is this something that's actually repeatable? Of course, there's going to be a few losses every once in a while. I might miscalculate something. Actually, on Friday, today, I had some technical issues with my platform today and the computer. And then I got into one trade. It wasn't going anywhere with the dollar yen. And I got tired of waiting for it. It just went sideways. It was after non-farm payrolls. So I closed it with -7 pips. That's it. I knew what it was doing. And then eventually popped up about 8 pips. And I could have waited for that, but it was just going sideways. It went sideways for a long time. Wasn't doing what I wanted. Wasn't doing anything. And I was kind of frustrated with the technical issues that I was having with the platform and the computer today. So I just closed out the trade. There really wasn't anything for me to do. Um, that's a different scenario other than just chasing price action up and down and looking for weird random opportunities. So again, hopefully these videos will be helpful in the sense that you might gain some insight as to my headspace, what I'm thinking, how I behave, how I perform. What is it that I'm doing? What's my trading style? Can I consistently operate like this day after day and week after week and month after month? So thank you for watching. I hope you had a good trading week. If not, and you're still struggling, consider using my trade copier. You can actually get my trade copier, get a subscription, and then put on a demo account. Put it on a demo MT4 account for about the first week or so. If you still have, issues with trust, I totally understand it. There's nothing wrong with that. And then once you see that it generates some consistency, you can just add the trade copier to your live account and start small. Start with small, start with micros. Start small. And then after a week of that, if there's some profits, then you can increase it. You may consider adding more to your own personal account. This is great for building your own personal account, having your own MT4 account, adding the trade copier, and then you can still trade prop firm accounts like, on the S&P or the NQ or whatever it is that your favorite might be. And take some of those winnings when you get payouts and put it into your own personal account. They can't shut down your personal account, right? They can't close it down. They won't take it away from you. So I have accounts with forex.com and Oanda. There are a few other accounts that I have. A lot of people ask me if they're in different countries, the UK, Germany, wherever you might be. What do I recommend? Those are the ones that I recommend just because I'm in the United States. I recommend, going with somebody regulated, but there are many others. There's some in Australia. There's a lot of different really good FX, MT4 brokers. Trade Copier works on the MT4 platform. If at some point in time they shut down MT4, but they allow MT5, my trade copier will work with the MT5. Right now, I'm just executing trades on the MT4. So if you have any questions, please send me an email. I'd be more than happy to answer your questions.